What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. So, just as this slide says, right, we're looking for the same things over and over and over again, right? We're looking for the same things every single day, right? But without a few key components, all right, we will never know if we should size in to a trade or not, right? Without using the 3-day setup day counts, all right? Without using signal days, we might not ever know when a sizable opportunity presents, right? Now, when it comes to Stacy's strategy, one of the main focuses, right, are ACB trades, 90-10 setups, okay? ACB means ain't coming back. And these trades are not coming back for a very specific reason, all right? And that reason is trapped volume, okay? When we have traders trapped on the wrong side of a trade, the market is not going to show those traders mercy and come back up to their entries and let them out with a small loss or maybe even a break-even position, okay? Instead, it's going to go straight to the opposite side of the daily range and stop those traders out, all right? So one key component to an ACB setup is having higher time frame traders triggered into the market. For the sake of this video, we're going to use daily time frame traders, okay? Daily time frame traders are triggered into the market at the break of daily levels. Does that make sense? All right. Daily time frame traders means traders who are using the daily time frame as their lowest time frame. That's their entry time frame. And they're trading the breaks of daily candles. All right. So if they're entering, let's say at the break of the previous candle's high, naturally, their stop loss will go at the opposite side of that range. That's why sometimes when we trigger that level, the market reverses and goes straight from the previous day's high back down to the previous day's low or the current day's low, wherever it happens to go, okay? We're going to go straight from one side of the range to the other to stop those traders out, all right? Now, when it comes to trapped traders, we can literally see when these traders are trapped on the wrong side of the market, right? We will be using the same reversal patterns that we talked about in the peak formations video, all right? But engulfments is really what we're looking for, okay? So imagine we break out of the previous day's high and we start to chop sideways and we make a sort of a box, a sideways coil, a box, right? And then we get a large candle or a couple of candles that dumps down, all right, and engulfs that entire coil that occurred as we broke out of the previous day's high. That engulfment is literally engulfing those daily time frame traders' entries and putting them into immediate drawdown, all right? That is what traps traders, and you can see it happen on your charts in real time, all right? And we're going to take a quick look at a trade like this, all right? So here is Bitcoin on the 29th, all right? You can see I have the high and low of the 28th marked off and projected sideways, right? Train your eyes to move horizontally at the levels. But here is our box, all right? One side of this box may hold while the other one gets taken, okay? Or something like that. So you can see here on the 29th, this market has been auctioning higher through Tokyo, okay, into London, and we break out of the previous day's high, and we break out with these strong candles, boom, okay? And then we chop sideways for a little bit right there at the high of the day, and then we get this large engulfing candle to the downside, right? It engulfs everything that's above the previous day's high. Okay, there are traders buying this, buy. They're buying it all the way up. And then we get this big down move that engulfs every entry that's above it. Okay. And anyone who's buying that market, including these daily time frame traders who are buying at the break of the previous day's candle, right? They're buying a breakout. They think that because we broke the previous day's high, we're going to continue auctioning higher, right? But the market has other plans. It engulfs all of their entries. They're immediately in drawdown, and it goes parabolic straight down through the low of the day, hitting the opposite side of the daily range, and then going even past that a little bit. All right, making sure that we absorb all of those stop losses from these traders who are buying up here. All right, we have a trapped traders at the high of the day. Okay, we can enter somewhere in this coil into the EMA and hold till the close of the day, right? And that is what makes this setup a 90-10 probability trade. The fact that we have higher time frames triggered into this market and trapped on the wrong side of the trade. You understand? Until next time, and I hope you continue to free your mind.